Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Let's run the numbers. Bitcoin currently down 0.01% to 41,870. Ethereum down 2.26% to 3083. From my 30 plus years in financial markets, I explain the smart money institutional mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. If you're going through a life pullback, please know that the love and healing thoughts of our community are with you. You're not alone. There's always hope, and the sun will come out again. Rule 45, no alt can escape Bitcoin's gravity. When we look at Bitcoin, we can get a really good understanding of where the crypto market is headed. Bitcoin is currently trading at around 41,769. We can see that this area of resistance has been holding Bitcoin's price back. But what do we notice about all of these tails? We're seeing a great degree of consolidation through this particular area. Bitcoin did actually come down and strike around 39,676. Very nice if you were in the market and layer buying. We can see that the potential probabilistic price action is that Bitcoin could come down to 37,406, and if it does so, it's doing nothing more than repeating past patterns in the market that we've seen time and time again. I made a note on December the 5th about these kind of patterns. What we really want to see is Bitcoin getting above this particular resistance line. That will play in at 41,933. We're actually pretty close to that line right now, but we have another level of resistance that will play in at around 43,253. When we get over that, we have another level of resistance as well at around 44,872. But when we get over that, when we start to trade at around 45,881, we're starting to look pretty good. My focus each day, 7 days a week, is to help you to see the smart money mindset and the various nuances behind it and how it differs often dramatically from the retail mindset. Just think about it like this. You're driving down a road. You see a stoplight. It goes red. What do? You stop, of course. That's what the red light is for. And when it goes green, you go. That is what we're taught to do with traffic lights. It's really natural. Now I want you to think from that application to the crypto market. You see everything red. What do? If you said stop or bail or sell, that is the retail mindset. The professional trading and investing mindset, the smart money institutional mindset, is completely different. They see red as the time to buy. Warren Buffett, currently worth around $116 billion, well done Warren, he said widespread fear is your friend as an investor because it serves up bargain purchases. Warren, of course, is talking about Rule 130, make volatility your best friend. Crypto goes up and down like a crazy thing. It's a crazy market, but if you understand the rules of the market, you'll do really well. He's also referring to Rule 112, markets profit in uncertainty. When the markets are red, that is the ideal time to lean in. Now, how do you lean in? You actually buy in layers, many layers down. What happens typically with the retail mindset, as soon as the market goes red, people sell. As soon as it goes green, people buy. This is actually the opposite way of thinking about profitably doing trades. And of course, investments. Because we understand Rule 4, price moves in waves. It's always going up and down. It's just what it does. So when we lean into a trade, that means that we buy at levels of support. And we don't care about timing the tops or bottoms of anything. The tops and bottoms are for the retail mindset. We're in for the momentum. What we can see here is price is definitely coming down. We've struck a level of resistance, And this is, I believe, nothing more than a technical violation by smart money. Smart money loves to put the fear, absolute fear, into the retail mindset. It wants to push the fear and greed index as low as it possibly can, and that is how smart money works. Why does it work this way? Because smart money has a lot of money to place on each particular support level. Because they do, they would move the market. They have to actually push prices down in order to get their fills, in order to accumulate. Every day I talk about rewiring your mind to a smart money mindset. The smart money looks at red and they lean in. They never go all in. It's just impossible to do. If the smart money went all in, it would shoot prices up or it would shoot prices down. They simply do not do it. They have so much money, they can't do it. They literally must go in layers. When smart money sees green, they start to ladder out. This is very, very different from the retail mindset. Basically what happens is the smart money sells to the retail mindset crowd, and the retail mindset buys from the smart money. There are these two opposing forces inside the market. Every day, what I try to do is to give you that smart money mindset so that you can align with the power inside the market. This is exactly why Warren Buffett said widespread fear is your friend, because not only do you get bargain purchases, but where you buy determines your profitability. If you buy at high prices, they need to go even higher to get a decent profit. If you buy low, you can do really well. But buying low does not mean picking the bottom. That's another retail trap. Baron Rothschild said, buy when there's blood in the streets, even if the blood is your own. Warren Buffett was actually famous for doing this. When the COVID crisis hit and the world panicked, he was basically buying. He was sitting on a mountain of cash, and he thought, okay, what I can see here is the market will bottom out. He was thinking about the 10-5-10 rule. Not that anybody ever tells anybody about the 10-5-10 rule, except for our community. The concept is, if you had $10 and you lost $5, you've basically lost 50% of your money. But if you had $5 and you found $5, your money just went up 100%. This 10-5-10 rule is the absolute elite gold/Bitcoin standard of how to buy. And that doesn't mean that we seek 50% reductions. It's a theory, it's a concept, it's a way and methodology of thinking. When the price goes down, that is actually when you make your money. So always buy in layers. The retail mindset thinks that you always have to be profitable. This is impossible. The markets do what the markets do. You only move with the markets. For example, if you were buying in layers down here, for example, you are in a loss, and that is on paper. Paper losses, yes, they do feel very real, but they're actually really fake. What you are doing is you are accumulating, in this case, more of Bitcoin. But if it's your beloved alt, you're actually going up in terms of the quantity of that particular crypto that you own. That is really good, because as the price moves in a wave up and down, and of course it will always move up if you've got a good project, that means that you will do really, really well over time. And that can be a short period of time, or it can be a longer period of time. Why do the most successful investors and traders in the world say buy when there's blood in the street? Let's actually check it out. If we go up here to around the top of price action and we just draw this percent indicator down, we can see Bitcoin has actually come down around 42.37%. Let's go the other way. Let's say that Bitcoin just recovers its previous price. That is a 73.96% improvement. That is why the elite traders, the professionals, always buy when the price is coming down, and the redder, the better. Professionals look at a red market and say, wow, I'm excited, this is the way to go. Retail investors and traders look at a red market and say, oh my goodness, I've got to get out. And they have so much stress. And this is simply from a misunderstanding. The elite do not tell normal people what they do. But of course, there's a little bit more to it. Warren Buffett said that the stock market is designed to transfer money from the active or impatient to the patient. And it's absolutely correct. Sometimes we have to wait a while. The market will not always move in our direction, even though price does move in a wave. This is really important to understand. Many people think that the market will obey their bills and their dictates. It will not. It just does what it does. We have to move with it. That's why understanding the market on its own terms is really, really important. And all professionals do so. And they have massive amounts of patience. And they can also weather negative or paper losses because they understand they're buying in layers when price comes down. They're literally looking for something like this. This is absolute payday for a professional investor. Seeing price come down by, say, 42%, if it just regains its previous price, that's a near 74% increase in price. If you think about that, you can understand why prices are negatively biased. What typically happens to retail investors and traders is that they look at negative price momentum and they say, oh my goodness, I got this wrong, I need to get out. That's precisely the time when they need to be in. But this is really, really difficult because nobody teaches the smart money mindset. They don't hammer it in. And there's a lot of things that need to be learned. A lot of different nuances go with the smart money mindset. For example, the first thing is that you look at red as a welcome gift. You're actually looking at the percentages moving in your favor when you scale in. You never ever go all in. No smart money professional, no professional investor or trader would ever go in. It's the very antithesis of professional trading. Professional traders always layer at levels of support below, and they go pretty deep too. They can go a long way away from price action because the markets are so volatile in crypto. They want to capture those long tail rejections. There's another really important distinction, Rule 138. All investors become traders every time they buy or sell. A lot of people look at themselves as investors. They say, I'm in it for the long term. I'll just hold diamond hands, diamond mind, all of that kind of thing. But many investors actually do that light switch effect, that traffic light effect. They tend to buy when things are green because that gives them a lot of confidence and security. And we know no financial market gives security. It's all fake. Instead, what investors should be doing when the markets go red, they should be dollar cost averaging in. And of course, that means that you believe and understand the project that you're looking at. When the markets go green, that's a completely different thing. You can look at that from a scale out perspective. But I'm not simply talking about one wave. There are all sorts of targets that come into play. Hopefully you can see why Rule 774 is so absolutely critical. We must master ourselves emotionally to be professionals in this market. Crypto is so incredibly volatile that without emotional control, emotional mastery, we get ourselves in trouble. That's why we focus on KS Real Wealth and maintaining a positive excellence life trend. Emotional mastery cannot be just applied to the market. It must be applied to all facets of life. That creates inner and outer peace, integrity, decency, kindness, courage and honor, fearlessness. These are the commodities that are truly valuable to us as a community, as well as money. Of course, money is incredibly important, but without the components of a positive excellence life trend, money can be fairly meaningless. Masterclass students, you will have a shared version of my live chart here. What are we looking at here? We're looking at the red line traveling along the bottom. If we had a black swan event like we had in COVID back in March 2020, if we had that, we would expect that price would stabilize around the 25,935 mark. That's the absolute worst case scenario for a black swan. And if we got that, that's the most incredible, fantastic time to buy. Any purchases on this red line are very, very good, especially because we are still in the bull market phase. We've had a lot of turbulence inside the markets, too much excess liquidity that was blown out, all sorts of other things. But the key is that we are still expecting upward momentum. And why do I say that? Isn't it just a passing fad, this crypto? No, it's the ownership layer of Web 3.0, the decentralized internet. And even without Web 3.0, all of the cryptos serve a very fundamental purpose of upgrading society's infrastructure. We're literally turning digital. And it's really interesting that I said it in a previous episode that the metaverse and omniverse will actually facilitate us living inside the internet if we wish. But of course, we always need to manage the fact that we're human beings and we need to go out and feel the grass and smell the air and go for a walk in the mountains and countryside. Absolutely, no question about it. Around the turn of the last century, horses and buggies were the predominant form of transportation, and then these evil things called the motor cars, the horseless carriage, came to destroy the horse and buggy industry. Well, it did, because cars actually save time. Saving time is a critical component of the advancement of the human race. We always talk about productivity. Productivity is doing more in less time. For example, if you wanted to travel by horse and cart, or horse and buggy, or just even horse, a couple of 100 years ago, it could take a ridiculously long period of time to get from one destination to another. The car cut this time down. That's exactly why it was adopted. And when we look at the internet, what did the internet do? It brought everything into our lounge room, into our living room, into our study. We could do our shopping online. We didn't have to go out. That was pretty cool. That was time saving. For example, many people just use internet banking rather than going actually to a physical branch. I know people still go, but the number is really decreasing because people need to save their time. They're really busy. And what does crypto represent? It's the internet of money. It's the ability to do remittances without going to Western Union. It's the ability to transfer money between loved ones, no matter where they are throughout the world. It's a lot of things, and it's actually revolutionizing the banking system. It's disintermediating the banks. We can all be our own banks now. Of course, that's going to have a bit of pushback, absolutely, because the banks just simply want to get on the right side of the technology. That is it. And you can think back to LP records that were replaced, CD-ROMs that were replaced, DVDs, tapes, VHS, beta. Wow, think back. We've got the internet being the dominant form of transportation of all sorts of mediums. But the internet of money will open up the world in ways we can't possibly fathom. That is what you're invested in the crypto space. If you haven't had the opportunity yet, I suggest that you hop across to Medium and look for why Bitcoin is misunderstood by experts and why do experts regularly fail to predict the future. I wrote this back in July of 2021. This is a really, really great article. It explains about the history of flight and why so many intelligent, very sensible people just didn't get it. But of course, it didn't stop flight, even though they wanted to slow it down. The same thing is happening with crypto. I also have another article on Medium that brings out this particular chart. We've got a massive adoption curve on crypto. It's growing really, really rapidly, far more rapidly than the internet ever did. And you know, the internet just exploded. When we think about the internet, the next level of evolution of the internet is crypto. It's literally going to change the world, and the adoption rates are really, really low at the moment. Most people think that crypto is a fad, just like they thought the internet was a fad in around 1993, 94, 95. So just be aware of these things. When people say it's all dead and done and dusted, they said the same thing about the internet. wow, how wrong they were. So what is actually happening here? When you look at these tails, they're rejections. So the price was basically smart money was trying to push the price down, but there's simply too many buyers. It just can't do it. That means in all probability they will launch a campaign because of these overhead resistances. Try maybe to do one last hurrah and push it down as low as they can get, with the concept that they're just accumulating. They know what they're doing, and then they will ride price up as all the retail investors and traders head for the doors. They will be actually taking their crypto from them. The other thing to note is the crypto is an exponential asset. We can get all of these very high powered candles in either direction, and we know sharp angles reflect, they reverse. It will be a time when the price will come up, and it will come up really, really fast. And we know that we've had a certain percentage decrease, but the increase is really astronomical in comparison to that. I had some people ask, Ken, if I know the price is going down, why don't I just sell and buy it back lower? The point is, we don't know exactly where price is going. It could rally up from here, and that's why we have to always make 3 probabilistic choices. We have to be like this little guy here who's walking down the road. Price may tank, it may just fall off a cliff. What will you do? What's the in advance probabilistic choice that you have made if that happens? What about if price just rallies exponentially up? What will you do? And what if it keeps on going sideways? What will you do? What happens with the retail mindset? They will pick one of these two, and generally they'll pick the more negative one or the more positive one. It gets polarized between these two. When institutional investors, smart money investors get in, they have an understanding of what all 3 decisions are. They do not enter the market without that comprehension. Another very big difference between the institutional smart money mindset and the retail mindset is the concept of certainty. Institutions and smart money know that there is no certainty. If there was certainty, the return would be next to zero. That's a certain return, just about nothing. When smart money looks at things, they say, I will take advantage of the volatility. And that's what they're about. When the retail mindset comes in, it's all about, I require certainty. I must never have a loss. Everything must go up. I must have perfect timing. I must capture every single positive move in the market. What you see with the smart money mindset, they tend to concentrate their investments. Retail mindset tends to spread out the investment, and they do so because they simply are not sure as to what will go up. And it almost becomes like a lottery. Hopefully one of those or a couple of those will really outperform. But generally when they start outperforming, retail just jumps on them immediately and sells them. The smart money mindset always looks really broadly. It looks through the stock market because the smart money mindset understands that there is interplay in between all markets. We can see the fear index of the stock market, the VIX, has come down. What does that mean? Prices have basically rebounded on the NASDAQ 100. Crude oil has come down slightly. We've had a bit of a slight bounce in the bond prices and a little bit of a leveling off in the yields. Gold has also bounced from support, and what we can see is the DXY was trying to get above a level of resistance. It failed to do so. It's going to come back and test a secondary support level. All of these things are really positive for Bitcoin. We can see the markets are not melting down. They're not crashing. News sources love to sensationalize the news. Of course, how else are you going to buy it unless the world is on fire? You might just say next. What we can see here is that there are many things that point to healthy markets and not like what the news is saying. Looking through the market, what do we see? We can see technical consolidation through this level on Bitcoin. What do we see with Ethereum? Ethereum had a little bit of a down spike, but it's consolidating around this past area of support. Binance Coin hit its level of technical support and bounced. That's what technical support is all about. That's why we draw out these lines. And the better you are at drawing out those lines, the more profitable you will be. Solana is just under a level, but we look at this particular consolidation happening here, and we can understand that literally all that's happening are the alts are being impacted by Bitcoin's gravity. When Bitcoin decides to turn around, these alts are going to go crazy. Cardano, ADA is still under resistance and looking quite weak. It looks like it actually came and hit that 10-5-10 level. Yep, it did. It hit 1088, and we had 1088 there for quite a while. I think I mentioned that level around, ADA was probably around 170 or 190 to $2. And this is the value of doing 10-5-10 levels. If you love the project, if you're a long-term investor in the project, you don't want to buy at 2 if you can buy at 1. And of course, we never know if that is going to happen. But we always assume price is negatively biased, and we get all of these long tail rejections in the market. We exist to grab those. When there's blood in the streets, including our own, we lean in. We never ever go all in. Looking at XRP, actually has a lot of strength here. How do I say that? Why am I saying that? You see this long tail rejection here in XRP. Look back to Bitcoin's fingerprint. What do we see? Price is actually below that rejection. Going back to XRP, price is above that rejection. This is showing a lot of strength. Just bear these things in mind. It'll give you a different edge when you look into the market. What about DOT? DOT is following literally to the ping, Bitcoin's fingerprint. That's why I draw this blue line in here for you, which is Bitcoin's price. Looking at Luna is doing really, really well, but understand what can rally in one part of the market. For example, Bitcoin has been coming down for quite a period of time now. What you may find is what I call a changing of the guards. What typically happens is the high performers, when the market is doing one thing, actually become take profit targets when the market starts to change character, and the markets are always shifting in terms of character. Please just be aware of this. Don't light switch out or anything like that. Luna is a really, really good project. The concept is to just understand the dynamics of the market. Looking at Doge is still under resistance. AVAX has broken through its support line, but it's just consolidating like many of the other alts. We understand that. SHIB is below resistance at the moment. Matic is doing rather well. Look at that. It's hit its support line. It's come down and filled a 10-5-10 level at 1934. This was almost unfathomable when price was up around 287. Who would have thought it would come down to 1934? We did. That's why we put the level there. Litecoin is still under resistance. Uni under resistance. Look at Chainlink. Chainlink is having a bit of a party. But what happens in this particular case? A lot of people will start to pile in. Hey, the light has turned green. Let's go. Let's go all in and more. Remember what happened with Matic, and remember what happened with ADA and so many other things. Buy at levels of support. Please keep your costs of trading in mind, or your costs of investing. They're really important. You don't want that to chew out your profit margins. But understand, when price is going up, we always get waves up and down, especially in cryptos like this. We can see Algo just consolidating around support, very much like many, many other cryptos. Literally no alt can escape Bitcoin's gravity, and you can see it right here. Bitcoin's gravity on Bitcoin Cash is slamming it downwards. And this is the way. Tron is very, very negative. It's got very weak price momentum at the moment. It's been pushed down a lot more than a lot of the other cryptos. Always bear these kind of things in mind. We can see Decentraland, Mana, coming in to fill different 10-5-10 levels. Axie Infinity also doing the same. Stellar still under resistance, but the entire crypto market is under resistance. So when the crypto market gets out from under resistance, we know what's going to happen. Everything is going to go and party. Looking at Atom, we can see Atom is coming into levels of resistance, and quite a few of them. When particular cryptos encounter resistance, there's a lot of sellers there looking to take profits or looking to short it, basically push the price down. When we look at something like Atom, when it gets above this resistance, it's going to do really well. FTX token is still under resistance, as is much of the crypto universe right now. Having a look at EGLD is under resistance. ICP has hit its particular level of resistance and is trying to get above it. We can see SAND is coming down in price, technically under resistance at the moment. A particular level could be around the $4 mark if you're interested in that. Filecoin is under resistance and showing weakness. I always say, when you've got a particular crypto that is in a protracted downtrend, that's what a lot of retail investors and traders like to get into it. But the problem is, when there is significant downward momentum, it's really, really hard to break. We've seen ICP done a break. It's come back up to test this resistance. We've got to see what it does next. We've seen ICP come from behind, attack its resistance, turn it to support, and then collapse down. When you look at cryptos, taking a crypto that has a really good uptrend, especially if it's coming into a level of technical support, is really, really good. They are very profitable, but always buy in levels under that support in case you get long tail rejections. Let's have a look at CHR. CHR is below daily resistance. We've got some monthly resistance coming in here. We also have daily support around the 57.08 mark. Could be quite interesting what happens to CHR over time. Looking at Theta is under resistance at the moment. Ethereum Classic, a lot like Bitcoin Cash, is really suffering at the moment. Poor old Ethereum Classic. It's a classic. When we look at NEAR is behaving really, really powerfully. You've seen a lot of wobbling around here. That means that a lot of people are trying to push the price down, but NEAR will have nothing to do with that. NEAR wants to party, it wants to go up, and it's showing a lot of strength here. When we start to get above this 1760 mark, I think there could be some really interesting developments. But always remember, buy at your support levels below, because price is really, really spiky with NEAR, and you make your profit when you buy. Let's have a look at the community favorites. One thing we can see with Veracity, it's just following Bitcoin's gravity, but this is the difference between alts and Bitcoin. When the alts come down, when Bitcoin comes down, it pushes the alts down a lot further. Let's have a look. We can see VRA has come down about 73.71%. Now, if it goes back up and just touches its previous all-time high, that is, if it just recovers back to where it was, it will increase 275%. This is why smart money always buys the red. There are very mathematical reasons behind it. And that would simply be a recovery of price. But for people, I'm not suggesting you buy a VRA. I'm just suggesting that you look at the mathematics. When things come down really, really heavily, if the project is good, if it has longevity and it's going places, when it actually turns around, because you can see this one is following Bitcoin's fingerprint, as Icon is following Bitcoin's fingerprint, as IOTA is, as so many of them are, when they actually turn around, they're going to do incredibly well. We can expect, I believe in the not too distant future, many days of double-digit green, and it will surprise a lot of people. Smart money does that all the time. That's why they do technical violations. We can see Icon just simply obeying Bitcoin's gravity. On days like today, you can see Bitcoin's gravity play out. It's really, really powerful to know that. A lot of people only look at their beloved alts, and they just are perplexed. Why is this happening to me? Why is my alt going down? Surely it's got nothing to do with Bitcoin. Well, this conclusively proves Bitcoin rules the crypto market, so we must pay attention. Let's have a look at IOTA. IOTA is just simply following Bitcoin's fingerprint, CRV, coming back into a level of support, and a lot of support along this line. Pretty cool stuff. Let's have a look at KSM. KSM is coming back into a level of support. RLC is still under resistance. What we see here, audio has just lost its support line, but this support line means very little in one sense. When Bitcoin starts to bounce up, as it will eventually, sooner or later, as soon as the smart money has finished accumulating, it will rally the price up and will do so exponentially. But that doesn't mean we FOMO in. Never. Always buy at levels of support below the current price. As you can see with VRA, price is negatively biased. This is one of the foundations of the crypto market. And it's so sad that very, very few people talk about it. If they did talk about it, they would save so many people from sleepless nights. I guess they're just like news stations. They want to put the open mouth and the world is ending kind of news to get more views. Well, that's not very nice. Cartesi, we can see Cartesi is just suffering Bitcoin's gravity. That's it. I'd like to thank all the very kind and generous community members who reached out and bought me a coffee on buymeacoffee.com/CryptoTradingKS. Thanks so much, everyone. And especially to the Meditative Mind. Beautiful comment. We are part of something so much bigger than ourselves, changing the world for the better, one video, one class, one comment at a time. What a beautiful comment. Thank you so much, the Meditative Mind. Really nice of you. And Jeeves, thank you so much for your kind words. I'm learning more than I ever thought I would with the KS family. That's just beautiful. And to Badger, thank you also, my friend. I am learning so much in the masterclass. Every lesson has new things I would have never learned otherwise, delivering past all expectations. Thanks so much, my friend. What I did yesterday, as promised, is that I put out this month's video to the Coffee Club community. I just want to say thank you for your very kind generosity. I very much appreciate it, and your comments are just so lovely. Thanks, everyone. From the video yesterday, I'd like to thank Chris for his comment. Good work, Ken. Up to lesson 19 of the masterclass. This is really, really good. Chris is very experienced. He's finding it hard to not superimpose 15 years of trading experience onto the charts. The masterclass is already enhancing other skill sets and other TA methods. What is really interesting here, Chris, is that the specific form of crypto technical analysis that you're learning is all about actually revealing price action without trying to fit current price. This is a really different way of looking at the market. I absolutely understand what you're talking about, and I understand your background. This is how incredibly different crypto technical analysis is from stock market TA and Forex TA. One thing that I've always found really interesting, when I look at particular people who come from a stock market background and they teach crypto, they do so in a way that just reflects the realities of the stock market. And when Forex traders do it, they reflect the Forex. It's understandable to do that. The problem with crypto, it's literally a market of bubbles. It has exponential price action, implosions, explosions, all sorts of things that are not normal in the stock market and not normal in Forex. That means that we need different tools. I'm really glad you raised this, and I really love that you explain your experience as well, because it helps people to understand the crypto technical analysis and the pure crypto technical analysis that we do is so much, much more than anything anybody has ever discussed previously. Thank you, Chelsea, for your comment. Your question, Chelsea's comment, was about if I was in Filecoin, would I get out and take a loss? The answer is definitely not. When you're in loss, You have to look at the overall context of the market. Bitcoin has been coming down 61 days. That is sufficient to basically shake out 95% of retail traders and investors. They would be heading for the hills. This is exactly the time that you should not get out of any particular crypto. A technical bounce would be underway soon. Thank you for your question. The meditative mind talked about liquidity, and this is really important to understand as well. Some coins, some tokens are very easy to get into but impossible to cash out of due to low liquidity. Please keep that one in mind. It's really, really important. Thank you, meditative, again. I hope the stoplight analogy really helps people. Understanding how smart money looks at a traffic light is really different to how retail looks at it. They view the red as green. They go for it. The redder the better. And the green they view as a way to actually exit their positions. They're very, very different. The smart money mindset is actually highly counterintuitive, and it does take a little bit of time to get used to. I discuss that smart money mindset and the foundations in the masterclass. You can find a link to the masterclass in the description of this video. I thought a very interesting topic for the community to discuss is the concept of fear, and especially how it plays into the crypto space. Understanding fear and controlling it and making fear your best friend. Wow, what a concept. What do you think about that? I'd love to hear your thoughts. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. Please say hi and let me know if you have any questions. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care, and see you next time. Bye for now.